Good morning, I'm Steve Forbes and this is 90 at 9, brought to you by interest.co.nz. This is where you get everything you need to know in 90 seconds at 9 o'clock, with news that India is about to make international economic waves with its massive spending plans. But first, in the US, new orders for durable goods fell in April by more than markets were expecting. Excluding orders for military spending, they were down by 2.5% from March. But things are not so close for non-defence capital goods, which were down 4.6% year on year. Moderating demand and weaker prices are raising concerns, and the first place to feel the pinch is America's road freight market. But in international bulk shipping, the Baltic Dry Index is rising and has done so steadily since early April. It is now up to a level last seen in January. On the trade war front, the US President said his complaints against Huawei might be resolved within the framework of a US-China trade deal, while at the same time calling the Chinese telecommunications giant very dangerous. And the US is moving to allow companies to seek tariffs on goods from countries found by them to have undervalued their currencies. It's a move that would further escalate its assault on global trading rules. While in China, Huawei seems to be in serious trouble. Beijing policymakers are raising their rhetoric, phone assembly workers are taking leave, and the company itself is now seeking $1 billion in funding. In Japan, they've adopted a record-breaking fiscal 2019 budget that includes $28 billion in stimulus aimed at softening the impact of a looming consumption tax hike on an economy already facing broader uncertainty. While in India, Prime Minister Modi was re-elected last week with a resounding majority, the new government is now about to go on an eye-popping $1.4 trillion spending spree, which is the equivalent to more than 2% of world GDP and will be felt around the globe. And closer to home, the RBNZ Deputy Governor Baskind was in Australia at the end of last week, where he faced criticism over his plans to require their big banks to hold more capital in New Zealand. He is reported as saying he is open-minded about modifying the drafted requirements. The US Treasury 10-year yield has risen back to 2.32%, but that is 7 basis points lower in the week. Recall it fell 7 basis points in 2 of the previous weeks too. Their 2 to 10 year curve is now at 16 basis points, but their negative 1 to 5 year curve is wider at 21 basis points. Gold is little changed at $1,285 an ounce. US oil prices have recovered somewhat from the sharp drop late last week and are now at $58.50 a barrel, but that is still down more than 5% in the week. The Brent benchmark is at $68.50 a barrel. The Kiwi dollar will start the week firmer at 65.5 US cents. On the cross rates, we're little changed at 94.6 Australian cents. Against the euro, we're similar at 58.50 euro cents. That'll make the TWI5 little changed at 70.5. I'm Steve Forbes, and that was 90 at 9, brought to you by interest.co.nz.